Hello, check.
pensions and health conditions. So, sometimes you wait too long.
Good morning, everyone.
Can you hear me, Paul?
Yes, thank you.
Where's Jody? Jody?
Says she's in.
Did you try to contact Jerry?
Jerry, I just.
He said he's calling in.
He is.
Well, you said that in your.
No, I just talked to my phone.
Okay.
And he is jumping on through the link on his phone again.
There you go. One, two, three. Okay.
I'm going to sell your chair. Paul. You're.
I'm like an Illinois.
You're.
We're muted. He did.
Thank you. We'll just need to approve whoever's not here.
I know. I first want to make certain Jerry is called in and is hooked up.
Do you have any other attendees that look like a phone that you renew?
Yeah. So me and,
Yeah. You want me to call him and tell him, see if he's having issues and tell him he can forego if he's having issues? I sent him a text. It's just going straight to voice now, so I sent him a text and then he's having tech issues and people go.
If we think we can solve those issues in the next couple of minutes, that'd be great.
Perfect, he's having issues, so.
Okay, tell him we have 4 other members in attendance after all.
Okay,
And so we can proceed and he can join us if he would like to, or if it seems to be impossible, he doesn't have to.
done.
All right.
Thank you.
We ready?
Yes, sir.
All right, let's call the meeting to order. We have 4 board members in attendance. We were scheduled to have only 4, but actually we potentially had 5 because Pepe was able to be here after all. Could we have a roll call, please?
Have I been?
Yes.
Paul Hample,
Present.
Lieutenant Colonel Lord, Sharif Mansouri,
Sharik had contacted me several weeks ago to let me know that he was going to be out of town for 2 weeks this month, including this current week.
Jody Patterson,
Here.
Anthony Waskowitz,
Tony contacted both me as well as contacted me several weeks ago, matter of fact, to let me know he would not be able to attend this meeting because of a client conflict that he cannot change around. He also contacted Becky.
Milton Wilkins,
I'm actually here.
Vicky Frederick.
Here.
Matt Livesey,
I'd like to make a motion that the board approve the explanations for Sharif Mansouri and Tony Waskowitz as to why they could not be here at this meeting.
So moved, Hample.
Campbell and then Pepe seconded.
thank you.
All in favor?
Aye.
Aye.
Unanimously. And now we have approval of the minutes for the meeting that occurred on June the 23rd. Are there any comments to the minutes? Any changes, suggestions, modifications? I have a motion to approve.
So moved.
Second, Hample.
All those in favor say aye.
Aye.
Any objections? No. Okay, now we move on to the retirement benefits. First, for civilians, the number seems remarkably low, but I will take your word for it. We have 1, 2, 3, 4, 5, I'm counting correctly, 5 civilian requests.
11, yeah, I think there's
Civilian,
11.
that's police on the other side of the sheet. How many civilian requests do we have?
There's 11 total.
The sheet 2 of 2, okay, 2 of 2 is police on the other side, so I'm missing a sheet here, or I overlooked it probably.
Yeah, I answered.
Hmm?
You do.
You don't have it in your.
Yes.
Okay, so we have the 11 civilian requests. Were there any controversial matters dealing with any of them?
No, not facilities.
We have a motion to approve.
So moved.
Second.
Pepe, Jody. Am I correct in saying we have only 5, 1, 2, 3, 4 police requests? Is
Yes.
that complete?
Yes, sir.
May I have a motion to approve?
So moved, Hample.
Pepe, Paul Hampton.
Thank you.
All those in favor?
Aye.
Aye.
We have mercifully relatively few death requests, but obviously one is too many. We have 5.
There's 6. 1, 2, 3, 4. I worked on one of the.
That's police. And
Oh, those are civilians. Okay, I agree.
5 civilian requests for for death benefits. Any issue? May I have a motion to approve?
Moved.
Second.
Jody, Pepe, all in favor.
Aye.
We have 1 request, James Albrecht, death request for police benefits.
He is one of several beneficiaries for the decedent. We present those to the board as we in contact with them.
Let's say,
Um,
so there will be others.
Yes. Some we've already approved, but
Okay, very good. May I have a motion to approve?
Moved.
Second.
Jody and Pepe. All those in favor?
Aye.
Aye.
So far, so good. Now, we have our esteemed colleagues from NCG.
Thank you.
To report.
Good
Will
morning.
educate us on what's going on.
Good morning, everyone. Hopefully you've all had a chance to meet Patrick Miller. Patrick, to join us today. He's a portfolio analyst, works closely on the consulting team with Finney and I. But I could ask him to come to this meeting. He's going to start off and just review some market, what's been going on in the markets. I'll touch on performance.
Yeah, great. I'll just say a couple things about myself real quick before we jump in. I've been at ACG for 6 years now. I've met a lot of you or worked with you via email over the last few months. But I've been at ACG 6 years. I used to actually produce the performance reports that Jake's going to go through. I did that for a couple of years, probably 4 years ago. So, and now I'm on the consulting team with Vinny and Jason. So I went to SIUE and am now working with you all. So if you want to look at this monthly ASAP report we have here, just the standard one we have, we added some economic slides. If you start with page 3, the overall theme for the year, this data is through the first 6 months of the year, so the first half of the year. Overall theme is markets have performed well, and they have been led by a handful of tech companies. Think of NVIDIA, think of Apple, Microsoft, and so forth. The S&P 500 here, that light blue bar on the left of this market snapshot, up 15%. But your developed nation and emerging markets, those have also performed well, up 5% and 7.5% respectively. And we're seeing kind of the same type of themes play out in non-US markets where there's a handful of stocks that have contributed to a lot of the return. Here in July, we're starting to see some of that reverse, where small cap in particular, those stocks have started to do a lot better. But you can see here, year to date through 6 months, the Russell 2000, which is a composite of small companies, up only about 2%. And I'm going to touch on that a little bit more in a couple slides, but they've been hurt by interest rates, and then again, a couple of leading companies. And then we have Bloomberg. All these indices are bonds. Bond returns have been hurt by the higher interest rates that we've seen, and higher expectations of interest rates than we were at the beginning of the year, which I'll touch on the next slide. A little bit just on this bottom right chart, you can see, so the S&P 500, this is for the second quarter. You can see a lot of the indices have actually trailed a lot of sectors have actually trailed the S&P 500. And again, technology, communication services, the Apples and Googles of the world, and NVIDIA have really kind of led some of the market returns recently.
But there's a thin line between how Standard & Poor's separates technology from communication
Yes,
services.
absolutely.
So really should consider it almost all as one with a lot of subsectors. But
One other thing to point out in that chart that is pretty astonishing is if you go down near the bottom, the S&P equal weighted, S&P 500 equal weighted, that is the same 500 stocks in the S&P 500, but instead of being weighted in the index by the size of the company, where the biggest companies are contributing the most to return, which is what we've seen, every stock is weighted the same. So if you equal weight that index, it was negative for the board, an indication that smaller cap companies really haven't been keeping up. And I know Patrick said this, but just the size of that differential is pretty dramatic. On a 1 year basis, the S&P is up 24% through yesterday, and small cap is up 15. You'd say, well, that's pretty good, but that's a 900 basis point or 9% differential. And really talk more about how that's impacted your relative return relative to your policy index in a bit.
Yeah, thank you. So looking at the next slide, I mentioned interest rate expectations have changed quite a bit this year. And you can see this left chart is investors' expectations going into the year of interest rates. We entered 2024, inflation had been slowing dramatically, and we were expecting the Federal Reserve to cut interest rates 6 or 7 times. That's what markets were pricing in. And this light blue line at the bottom, that's the December expectations for interest rates. And investors thought we'd end the year 2024 below 4%. Every month since then, we've started to see those expectations creep up as consumer spending has remained strong, the economy has remained strong, labor markets remain strong, and inflation has been a little bit harder to tackle than originally thought. So interest rate expectations have been shifting up, and markets are pricing in interest rates ending the year at about 5%. If we update this through today, it might be a little bit lower, but still quite a dramatic shift from the beginning of the year. And this has led into higher interest rates throughout the economy. 10-year Treasury yield is kind of a benchmark for a lot of other loans, and both of these will impact credit card loans, mortgage loans, car loans. So we're seeing these higher interest rates. However, for an investor like yourselves with your fixed income portfolio, you have that higher yield going forward. So on a go-forward basis, these higher yields are a good thing, while they, in the short term, do impact bond prices. Now, this higher interest rate, as I mentioned, have been because the labor market's been so strong, consumer spending has been real strong. If you flip to slide 5, a big reason for that is because of all the stimulus we got in 2020 throughout the pandemic, post-pandemic. Individuals were able to save a lot of money. They have a cushion of excess savings, and they've been able to, the consumer spending has really propped up the economy. And we've added $8 trillion to GDP over the last 4 years. And this has also translated into higher asset prices, and particularly some of the higher tech names such as NVIDIA, Apple, and so on. If you flip to the next slide, this kind of, yeah,
If I can
go
go
ahead.
back, and my apologies. For those commentators on CNBC
Mhm.
who complain about the amount of money that the Biden administration pushed into the economy, that amount of money was to save lives and keep this economy afloat. And if you underspend, people die or the economy suffers. So we just hope
I
we don't
think
have.
that's what this, in the GDP, so economic growth has been good for the
Yeah.
last 4 years.
Yeah.
The other, what we're trying to highlight here though is how, and from an asset value standpoint, how narrow the price appreciation has been across asset types.
Yes, I was making an editorial comment
Right.
on the socio-political economic scene
yes.
rather than on your specific
Right.
proposition.
Yes, it's certainly not a bad thing, and it's like with a strong consumer, strong labor market. Without that, we might have been a different story. Of course, we can never know, but, and so, yeah, this next slide, page 6, kind of illustrates, to Jason's point, how narrow or how few stocks have led the appreciation in the S&P 500. So NVIDIA, for example, has added, this first column is year-to-date gain in market value. So year-to-date through 6 months of 2024, NVIDIA, for example, has added $2 trillion to its market cap. These 6 stocks in this first column are AI-linked stocks, and they've added $4 trillion in market value this year. That compares to some of these household names right next to it, in the Dow Jones Industrial Average, and their total market value about $4 trillion. Japan's entire economy, its GDP about $4 trillion. So it kind of points to the
Just to
how
say that
great
again,
this growth has
the
been.
first column is gain year to date. The second column is the total historical market cap of those 7 names. So that would be household names, just to show how impactful those names have been. And really disguising what's gone on in the broad capital markets. Things have gone well. Your portfolio has done well. You own those names. You don't own as much of those names as the index because it's gone up. And I know there's been talk here about, should we be reducing risk? Well, number one, you don't have as much risk as the broad market because you're not owning as much of that, unfortunately, from an active management standpoint. And more importantly, the required rebalancing to pay retirees every month. We're trimming the risk on a monthly basis from the portfolio to pay retirees. And we're taking it from what's up the most, which are these names.
Yeah, and I think Jason made an important point that we have benefited from the portfolio from exposure to the S&P 500. Jensen holds some of the
Exposure to these names would be primarily through Jensen. Do you recall what Jensen's largest position is?
At times it's been NVIDIA and at times it
They
doesn't.
don't have 12% in them.
No.
Or 12% in Microsoft, or even Apple, I wouldn't think, whereas the S&P does.
Right. I can get on the next slide.
Yeah.
It's not just Jensen though, it's the index.
Yeah.
The
We do own the
portion
index.
of your
We do own
large
the
cap is through the index and you own
The Jensen's-
market weights.
Jensen is really the overweight.
Yes.
Yeah, and it's important, as we were mentioning, to maintain that diversification in the event that some of these large tech companies might not perform as well in the future. You can only go so much. And so we do have exposure to small cap companies, international developed companies. This next slide, page 7, there's a lot on here, but I really just want to point out a couple of things. If you look at the top 10 on this large dark blue bar, that's the Russell 1000 large cap companies.
Mhm.
And the top 10 stocks in the Russell 1000 was about 60% every year
Index.
of the growth index, sorry. Every year though, Russell does a reconstitution where they change the weights as markets move. Some large cap companies become mid cap companies, which become small cap companies, and vice versa. Some small cap companies might explode in growth and become a large company. And so Russell reconstituted the index a couple of weeks ago, and the Russell 1000 growth and the Russell 1000 have become more concentrated. Those top stocks have performed well and are now an even larger part of the index. Now, this gold bar, for example, that's the Russell 2000 growth. That is a small cap index. It had the top 10 stocks only 11%, and the reconstitution now down to 7%. So there's more diversification within the Russell 2000, within small cap stocks. And we're starting to see here in July, actually, interest rate expectations have been coming down, and interest rates themselves have been coming down. And this has boosted some of these smaller stocks that have more debt on their balance sheets, are more impacted by these higher interest rates. And so that's been beneficial.
One thing to think about here from an active management standpoint in large cap, where we do have some satellite active manager positions within growth, it's going to be harder for active growth managers to outperform if they don't own everything that's in the index. Because that growth index just got more concentrated. You mentioned NVIDIA. So pre-reconstitution, NVIDIA was 11.7% of the index. Now it's 12.5%. So you'd have to own a large position where many active managers want to be a little bit more diversified or have to be by mandate. The value benchmark, so the growth benchmark probably is going to be, or active growth should do better when things sell off, which we've seen a little bit this month. On the value side, it's a little bit different. Value became less concentrated. The largest position became less. So value managers have a little bit more opportunity. Small cap, that 10.9% in the top 10 in small cap growth, that's pretty concentrated within small cap. And the largest position went from 3.2 to 0.8. And just that largest position was super micro. Most small cap managers could not own super micro in 2020, last latter half of 23 and the first half of 24, because it was no longer a small cap stock. It grew from a $5 billion company to a $60 billion company. So it moved from the small cap at the end of June, it moved from the small cap index to the large cap index, but it was in the index that whole time, whereas active managers aren't going to be owning that because it doesn't fit the mandate.
Yeah, and so not owning those two stocks, the super micro and micro strategy is another one that was a couple percent weight has hurt relative active managers. It's been difficult. Same as large cap. If you didn't own NVIDIA and you're a growth manager, you likely don't look so great against your index. And same with the small cap, where not holding these micro strategies, super micro stocks that exploded in growth because they're linked to AI. I think super micro has high performance servers, and MicroStrategy is some consultant in AI. And so not holding those names has been difficult for active performance. And another interesting point is, so the combination of the Russell 1000 and the Russell 2000 is the Russell 3000, which is just the entire US, a proxy for the entire US stock market. And within that benchmark, 95% of it is large cap companies, large and mid-sized companies. 5% of it is small size companies that are in the Russell 2000. So that benchmark is really more large cap, and that's our relative performance from the strategic policy index, which Jason will get to, because we have more, about 25% of the US, of the St. Louis County portfolio is in small.
When did Supermicro go into the large cap index?
Yeah, it would have been June 27th or 28th, whatever date they did the reconstitution, just recently.
Just recently.
So that's an important point. So the Russell 3000 is what we use for the US equity component in your policy index. And it is 95% now. It was closer to 90-10. And as these large names have gotten bigger, it's pushed down the percentage of that index that's small cap. And from an asset allocation standpoint, just looking at the next page, on a target basis, We have a 23% target to large cap, which has done very well. We're a little bit overweight, which is a positive, having more of the thing that's done the best. On a relative basis, small cap, the target is 7.75, and we're a little bit overweight right now. The relative to that Russell 3000, as Patrick mentioned, we have a lot more small cap in the portfolio, which right now that's been a headwind, even though your small cap, it's not that like your small cap has done poorly, it's up 6%, trailing the benchmark a bit. And that predominantly is the smaller manager, Granite, which is a growth oriented manager, not owning those names that became large caps. So overall, the portfolio on a trailing 1 year basis up 9%. A little bit behind that strategic policy index. Most of it is that more small cap than what we're comparing to in the overall benchmark. Relative to the broad policy index, which we've talked about, this is just another way to look at things. That's the ACWI, the ag, and does not include any real estate. Look a lot different than that. The strategic policy index is much more relevant. Just a comment on the ACWI. We haven't talked about that. The ACWI is 9,000 stocks. It is predominantly, again, dominated by larger cap names, not a lot of small cap represented in that, but it's all country world. It's US and non-US. In the second quarter, 5 stocks, 4 of the ones we just looked at, plus Taiwan Semiconductor, contributed over 100% of the return to the ACWI index. It's a 10,000 stock index. The other 9,995 were essentially flat to negative in the second quarter.
Cancel each other.
So just comment, or these comments are all around how concentrated markets have been. As we look at performance on an absolute basis, your portfolio has outperformed your required rate of return over the last year. You're participating in that, but trailing benchmarks that are more concentrated. This month, we have seen things turn around quite a bit. And I don't know what the end of July is going to look like, but just through the month, I don't know if you have the.
Yeah, through yesterday,
Month
small cap Russell 2000 is up 8.5% versus large cap S&P 500 up 2%. So year to date, small cap are now up 10%. So returns are strong
And
because
the
of that.
value growth differential has swung this month, where value has outperformed growth quite a bit. Not to say that that's going to continue, but we do know that at some point, we are going to see a reversion to the mean. So sticking with that plan, rebalancing regularly, not getting too far out ahead of ourselves, we continue to believe is important.
Well, back in December, we also had a small cap rally. Fairly strong, as I recall, but it didn't.
Yeah, we had
last.
a huge one, but last week, like you said, it was 10%.
Yeah.
So.
It didn't last, so we just have to see. Something, so.
Yeah, I think if interest rates
Then
continue to
even
come down and
we're
economy stays strong, it should benefit small cap in general.
Yeah.
Time will tell.
So a little more detail on markets and stocks than broad markets today than normal, but we just thought there were some interesting slides to there.
Okay. So, want to cover any other subjects at all? What's next on the agenda in that case? We want to talk about drop. The drop committee update. Who's going to talk about the drop committee? I'm sorry?
I can.
Yes, please.
So Matt briefly, he was not able to be here. The drop committee has met several times and right now are waiting on more cost information from how costs associated with administering an added program. And once they hear back from that, Matt mentioned that they would like to try to present what their findings are and recommendations in August.
The August meeting. August is going to be really quite packed. We're going to see that we have to rationalize that a little bit.
So probably September would be more realistic to have all the ducks in a row, just to be safe.
Is there any compelling reason to have the drop report in August? As opposed to September, as an example.
I don't
Okay.
think so.
Or is Paul
Yes,
on? Paul?
yes, sir.
From Foster and Foster, that Paul.
You call in.
Why don't you, Becky, as best you can you give us some idea as to when Paul now believes he'll be in a position to present the actuarial report?
So Paul has worked with me on, Paul Bauer.
Yeah.
Worked with me on retirement data that we uploaded into DB Precision as we continue to work to update pension soft. And that data went through and is good. The status update data that we pulled through a crystal report from Eunice, everything looks good. We have one issue within the report that had some inconsistencies with about six earnings, 6 different people's earnings totals. So upon further going into that, I can't fix the crystal report myself. However, using that data and pulling, after fixing the correct numbers, I was able to share that information using Excel instead of DB Precision, the normal route, just in light of trying to expedite the process. And he's been working on that through last weekend until yesterday. He said he was making good progress, so hopeful for August.
Okay. The other thing we wanted to do in August is finally have William Blair speak to us.
They were
scheduled
scheduled to come in person.
Yeah, didn't expect them to.
Okay.
They could do virtual in August, if
Yes.
that's an option,
Yes.
or in person probably in September, October. Really up to you guys on your preference of how soon you want it.
All right, and then in August as well, we had hoped to finalize the recommendations that Maggie has
Mhm.
for the changes in the ordinance. So we had too much going on in August, so something's got to give.
Mhm.
I'll decide what gives and what's urgent or more urgent. And I'll get back to everybody. And in August is going to be a full agenda. If everybody can arrange their schedules to particularly be here in August. All right. Other business. I didn't want to schedule very much for today because I anticipated we'd only have 4 board members. Pepe surprised us. May surprise us again in August. No, I think it'd go that far. It won't go, well, no, you might want to stay up there for a while. Yeah, very pleasant surprise. All right, any other business that are suggestions for the August meeting with that just covered? All right, anything on correspondence that which if we're not?
Not this time, sir.
Okay. Visitor comments? Please, thank you. You could just introduce yourself and,
Hi, I'm Bonnie Miller. I was here, I think, in the February meeting to talk about the cost of living issues. And I thought this summer was when, I think it was supposed to be in June where that was discussed, but the actuary report wasn't in yet.
and still isn't.
Okay, well, so I'll come back in August, but I just want to kind of prep you a little bit, which is that I'm putting together all of the issues in regards to the cost of living raise for county employees, because there are 3 different serious negative impacts we have. The first is that we went 10 years with, I worked for the county 16 and a half years. The first 6 years I got merit raises. I had excellent reviews consistently in all years. From 2009 to the time I retired in 2019, we did not get 1 merit raise. Okay.
Mhm.
Now, I'm not the best employee in the whole world. Okay. But I worked nights, I worked Sundays, I worked Saturdays. I worked when the county needed me to work.
Mhm.
People in other positions did the same thing. The guys who plow the roads, they're out all night kind of thing. But no merit raises at all.
Hmm.
There were 2 small raises during that time, 2% and 2.5%. which were either across the board in the county or whatever, but everything was negligible.
Mhm.
So during the time I was working, I lost considerable income because we weren't getting raises.
Oh, yeah, opportunity. cost.
Okay. Number two, the amount of money I made by the end of the year was lower, which made my pension lower. Because my pension was based on my salary. And then, number three, I retired in 2019 and I haven't had a cost of living raise.
Mhm.
My taxes, I'm a property owner in St. Louis County.
Yes.
My real estate taxes from when I retired, 5 years ago to now, have gone up 34%.
Hmm.
And I'm being expected to absorb that and potentially more for a new building. And it's not, and I say me because those are my facts,
Mhm.
okay? But there are there are hundreds of other employees out there that
For a lot of people.
went through the same thing. And I really would like this board to understand the financial implications on us.
Mhm.
How am I supposed to pay an extra $1,000 a year in property taxes when I'm not getting any kind of increase in my pension and that? So I understand they're two different things, but on the other hand, that's one of the main things. And I know the funding for the trustees comes different. I think we're not part of the county budget. Is that correct? It's a separate fund.
No, we are part of the.
The
county.
retirement fund is separate.
Well, the retirement fund is separate, but
That's
the
okay.
county has to fund the retirement fund.
Okay, okay.
And that is very much part of
But
their.
I mean, what is in there now is already funded, correct? And you told me,
It's not 100% funded.
okay, I understand
It's
that,
it's
but
considerably less than 80.
But when I came in February, I was told to go to the county council, but by that time, I think it was too late. And I understand from people who work in the county that they are now considering budgets. So my question is, if the actuary report is going to be next month, is that right?
Mhm.
And that's going to give you suggestions on amounts of increases and COLAs, is that correct?
The actuarial, the objective of the actuarial report, among others, is simply to identify the funded level of the pension plan, which dictates to a great extent the additional funding that has to come from the county to try to increase the level of the increase of funded
So
level.
when will the COLA recommendation come from you
If
guys?
there's going to be a COLA recommendation, it would come shortly after the August meeting,
Okay,
which is not to say that there will be one.
I understand that.
Okay.
And the one from last year that you recommended,
Yeah, that was rejected.
2%, which was $28 a month for me. I mean, all I'm saying is that's what that would have meant to me, 2% would have been $28 a month increase. So I understand that you guys have fiduciary obligations and all that, and you can't,
Yes.
but I think that to go 5 years without any kind of an increase is just kind of crazy.
Yeah.
And so I'm just here to say, please, I'm just one of many who's dealing with this.
I've mentioned this to Joyce before. I'm not a county retiree. But if I were in your position, I would try to assemble a very large group of retirees and make a petition directly to the county council.
I think that's on my agenda. That's on our agenda,
That is what I
to
would,
try to,
because analytically, it would be very tough, given our funded level right now, and what I anticipate Paul from Foster Actuary to report. It'd be very tough for us to recommend any sort of meaningful cost of living adjustment, just purely analytical. The fund was originally set up to not have an automatic COLA. If I were you, and I have no idea what the reaction would be, I am not sure the reaction would be positive. Again, if you form a very large group and petition the county council directly, that might be helpful to,
well, the way the police got their raise was they packed the county council with men and women in uniform. So, yeah, I'm aware of that, and it's something I've been thinking about. But do we do that now while they're talking about budgets?
Well, yes, why not?
Okay. All right,
Why not? Because we're not going to be in a position to either make a definitive decision to recommend or to not recommend anything, let alone to have something approved or not approved,
right,
for at least another month. And it's going to take you quite a while to assemble a
Okay.
lobbying group.
okay,
What I'm suggesting is that you form your own, which is what I would do, form your own lobbying group. But because that would, ultimately, what you would like to have is something approximating an automatic COLA. And I don't see that occurring, and I know if we recommended it alone, it wouldn't pass. This has to come really from the retiree group to the county council and the county director, executive director, I should say.
all right,
That's
thank
what I
you.
would suggest.
Okay, thank you. I'll be back to talk about it when everybody else is here next week. Next
Yeah,
month.
our August meeting should be fully populated with board members and actuaries and everything else, so you can understand
Okay,
the funding situation.
right, thank you. What we normally have a 3 minute,
I'm sorry.
what we normally have a 3 minute limit.
Yeah, we do. But I wanted to respond to your question.
Yes.
Any other questions or visitor comments?
I just have a couple of things based on what was just said. My name is Joyce Gula. I've seen a lot of you before. And I'm just confused and just asking a question. I thought it was that the board had to make a recommendation to the council.
The board, well, when you say the board
If
has
there
to
was a
make a
COLA
recommendation.
recommended, that it comes from the board?
A COLA recommendation can come from the board. One was made last year. That one was rejected. The COLA recommendation can come from the board, but I think what you want is, if I interpret your past comments correctly, Joyce, and yours, you want something more than that.
What I would like to see is what is very similar to the other public
That's
benefits
what
in
I'm
the state of
trying.
Missouri. And they don't always give a COLA, they always review a COLA. Meaning that on a yearly basis, you would look at that and make a recommendation to give a COLA or not to give a COLA.
And we,
Base it on the consumer price index and not to do these layered ones because you will never catch up. We will never catch up. So it's got to be based on the rate of inflation or based on something. And each year you review it and then you put it in the ordinance. It was reviewed, but we're not able to fund it. Then the next year, looking at the rate of inflation, we're going to be able to give everybody one. Because right now, you know, I went the 10 years and I retired in 18 and I haven't seen a dime either.
Mhm.
Or when I was working.
understand.
And it just, when I did the comparison, just a yearly review, and if you give one, fine, what it is, we give the same rate to everybody. Because we're never going to catch up by giving somebody from 2011, the only one that got a COLA for an X amount of percent. I don't know. I'm not an actuary, but it doesn't make sense because you just got to keep rolling around. That's all. Thank you.
All right. Marianne, have anything? No?
I requested only. She's unmuted. Marion, did you have anything?
No, I do not.
Okay. Very good. Joyce, just to answer one aspect of, or comment on one aspect of what you just said. Some time ago, you wanted us to adopt an ordinance change that the board would evaluate whether to recommend a COLA or not recommend a COLA. We adopted that as a matter of policy, but we're going to go a step further, I think, in our changes. But the fact that we go a step further doesn't really change our modus operandi because that's the way we're operating. But we can't do anything until we have an actuarial report.
Understand that.
Actuarial report.
Can I ask a question, please? I didn't understand when you said, yes, the board recommends it. Are you saying to us that if we went to the county council without a recommendation from the board and asked for a COLA, they have the authority to grant that and bypass the board?
Yes,
Okay,
the county director, Dr. Page, in this particular
Right.
case, and the county council can initiate things independent of the
Okay.
board. We are an advisory
okay,
or essential
Okay,
to the county executive and to the county council.
got it. Thank you.
I did go to the county council before the last COLAs were granted on 3 occasions. And 2 of the 3, I was the only one speaking to the county council. And the other time there was one other person,
Gotcha.
but at least some of those people got one.
Gotcha. All righty. There being no other visitor comments, we're going to head into a closed session.
No, not today.
Oh, that's right, because I said to hold off until next week, so next month. So we have everybody available at that point. So unless there's any other business that someone would like to bring up, we're going to entertain a motion to adjourn.
So moved, Hample.
Second.
Campbell and Julie. Okay, all those in favor?
Hi.
Aye.
And again, we still have a number of things to discuss that Maggie had proposed in terms of changes to the ordinance. But I forgot myself, because we were only scheduled to have 4 members of the board here today. I didn't want to do it in absence of 3 other members of the board. 7 members of the board, in theory, should, even in theory, should be here next month, so we can finish off the recommendations, fully discuss them, and come to a conclusion on it, I think. We'll see. All right, thank you very much. Good luck.
Thank you.